So we have just to wait for the effective news release to see in which scenario we will be and to see if we can do something. If there is a big positive or big negative surprise which induce important movement, which happens most of the time, not always, sometimes even with a big surprise we don't have a movement or a movement in the opposite direction. So, but if we have a movement, I will show you how we can handle this kind of movement with the max. Otherwise, so I will force a trade on any pair or any other instrument we can consider. We can consider, for example, crude oil, gold, an index like the DAX, like the Dow Jones, any tradable instrument, and I will illustrate the trade risk management approach we have. So we have 3 minutes to wait, and as soon as the news release is made, especially for the US dollar, we don't need to rush because we may have some volatility, especially in the case of a big surprise. We need to wait for the volatility to settle down. But another reason is 2 minutes after the non-farm payroll, we have the revision of the previous non-farm payroll, so of the non-farm payroll of last month. And this revision, which is not necessarily always indicated in the Forex Factory calendar, I can show you that. So in the Forex Factory calendar, where it is here, the revision is not indicated here. So at 14:32, this is my time. But we have to pay attention because sometimes the revision itself can induce also volatility and sometimes can create directional movement in the opposite direction. So now we have the small green button, so we can wait now for the news to be released. And what I like to do is to decrease the size of the calendar here, just to see how some pairs will react before the news release itself. Because sometimes, of course, the market anticipates what may happen, and we can see some speculative movement starting before the news release. But for the moment, the market is extremely calm. We see nothing special, and so most probably, they are waiting for the news release. The ADP non-farm payroll last Wednesday has been very negative, but this is not necessarily a forecast, a good forecast for the non-farm payroll itself. So 1 minute to wait. And on my currency meter, almost all the currencies now are neutral, with one weak currency, which is the OZ, and one strong currency, which is the Kiwi. This is why I have always the pound OZ and the pound Kiwi on my chart. So we are at a few seconds from the release. Okay, now the market is reacting. Let's see what are the numbers. Let's wait for the site to be updated. And we have plenty of time because we have to wait at least 2 minutes, minimum 2 minutes. So we have 75,000. So we have a big negative number for the non-farm payroll itself. We are in the second condition here, but we need to see an unemployment rate also larger than 3.7%. 3.6. So the unemployment rate is not changed. It corresponds to the forecast. So we don't have the the unemployment rate in agreement. So this mitigates the negative number on the non-farm payroll, and we have also a negative number on the average hourly earnings. So we are not in the context of directional and sustainable movement for the US non-farm payroll. Now let's check for the Canadian non-farm payroll. We have a good number for the employment change and a better number for the unemployment rate. So we are in the condition here when the CAD should be bullish. So because we have the two conditions being fulfilled. The non-farm employment, sorry, it is not the non-farm, of course, this is a typo. The employment change, so larger than 25K, which is the case, 27.7K, and the unemployment rate at 5.4%, so smaller than 4.6. So we should see the CAD, so strengthening, and so a pair like the pound CAD going downward. But let's wait for the non-farm payroll, the revision, so in a few moments. So normally the revision is made now. The CAD is strong on my currency meter. The pound is pretty much weak. The yen is neutral, so we can consider the pound CAD or the pound yen. So short the pound CAD or long the CAD yen. Just to illustrate how we handle a trade with the MAX, I will use a special tool we have, which is called the MAX Trade Monitor, which is an EA we use to handle the execution of our trade. And I will attach the tool, let's say on which pair. I can take the pound CAD. I can take the pound CAD. MTM setting here. And I will explain what are the informations provided by the tool in a moment. So normally the trade should be a short trade on the pound CAD or a long trade on the CAD yen. Let me take also the MAX Trade Monitor on the CAD yen. And so what I'm going to do now is to widen these two screens just to have a larger window on my screen. And I will still keep an eye on the pound US dollar and the pound Aussie, for example. So the condition now, I'm waiting for a short trade in the pound CAD, a long trade on the CAD yen. In the meantime, I'm waiting for entry setup. Let me explain some of the tools we have on some of the information we have on that tool. So we use with the MTM. Let's consider, for example, the pound CAD. You can see that we have two panels. We have a button panel and we have a data panel. So the button panel represents one click button. The button will be a sell or a buy depending where we place our stop loss. So if the stop loss is above the price, so the order is considered as a buy, a sell order, and vice versa. And then we have an MX and an XXX button. Whenever we open a trade, in fact, we consider the trade is made of 2 units. And when we click on the MX button, so the EA closes one of the 2 units, and the XXX closes the other units. We can make scale-ins also, and the XXX will close all the remaining opened units. The size of these 2 units is calculated with the position sizing concept, which is based on 2 informations, the stop loss size and the risk associated to the trade. And the risk in this case, I have chosen 1% of the trading account. Now, the information panel considers 2 columns. The column with the label symbol gives the result or some result for the trade associated with the corresponding pair, for example, the CAD yen or the pound CAD. And the global column represents the global result if we have several simultaneous open trades. And so the tool, the panel provides several informations, and the main informations are the ESL result and the XXX profit. So the ESL result represents always the result of the trade if the price hits the stop loss, wherever the stop loss may be, because of course we can adjust the stop loss along the trade. And the XXX profits represent the result of the trade if we close the trade at any moment. So it represents the real-time profits if we close the trade at the present price. So you will see how this number evolves once a trade will be opened. And then you have intermediary result like what is the risk on the opened units, what is the profits on the opened units, so potential profits, what is the closed profit when we close some units, and in percentages of the trading account, and similarly in pips. And we have also the size of the stop loss whenever I move so the stop loss with my mouse. On the chart, you see some of the indicators we are using. In the course, we provide, of course, we give a detailed explanation what each indicator is and how we use these indicators. We don't trade indicators. We use indicators to just go faster to pinpoint two types of potential situations. The first potential situation is a potential trade, and so when we have a potential trade, the trade is identified by a setup bar. A setup bar corresponds to one of our entry setup or entry pattern we consider the price must form. But once we get an entry setup, so we have to validate that setup under three types of conditions. First of all, the technical conditions based on the tools we have on the charts. The second condition is the risk aspect. Is the risk appropriate? But the risk is handled by our max trade monitor, provided we predefine what the risk may be, and by the placement of the stop loss. And then the third condition is the global context. We have always to trade in agreement with the global context. As I have explained, so we have seen a big positive surprise of the Canadian non-farm payroll, so we should see the CAD strengthening, and so we can consider going long with the CAD, so short with the pound CAD, long with the CAD yen. So this is the global context, and I have seen no other special fundamental or geopolitical which can change this this directional bias. So. And the second potential situation our tool helps to pinpoint very fast is an exit setup. Whenever we open a trade, of course, we have to consider how to close the trade. And to close the trade, we use also exit setups. Exit setups represent several types of risk. We don't try to predict what the price should do, but with our exit rules, the aim of using our exit rules is to pinpoint when some risk appears for the trade. What is a risk, for example? Let's suppose we take a short trade, and at some times, so the price moves in favor of the trade, but at some point the price can begin to retrace. When the price starts a pullback, we never know so how far the pullback will be. It may be also a reversal. So this pullback will represent a potential loss. And the question is, how far will we allow the price to go against the trade during that pullback? This will represent the risk. So we need to have a way to quantify when the risk becomes too much important. And when the risk becomes too much important, our exit rules tell us how to reduce that risk. So, and reducing the risk means either adjusting our stop loss or closing one unit with an MX in order to bank some profit or to reduce the loss on a potential losing trade. So for the moment, the price is not moving a lot, but not in the appropriate direction. So we have to wait with patience for the appropriate condition. And so an important tool on our chart is the combination of these two yellow and orange lines, which we call our ETF lines, which are extremely close to the price action itself with almost no lag. They have a small lag between 2, 3, and 4 bars maximum, but they are extremely regular and not very sensitive to many of the pullbacks the price can make. And these ETF lines also help us to trade in a specific direction, which is then given by our companion indicator, which is at the bottom of the screen and which is made of two lines, one red and green line, which is called the slow bias, which gives the technical trend to follow. When this slow bias is red, we have to consider short trades. When it is green, we have to consider long trade, but always in agreement with the global context. Because I have said the context is to go long with the CAD, so for the pound CAD, I will consider short trade, which is precisely what the slow bias tells us. So we will have, as soon as we have an entry set up to go short, we will have the technical conditions, the appropriate technical conditions. And we have another line, blue and brown, which is called the fast bias, which help us to confirm some of our entry setups. Not all of them, but some of them. And then we have special lines like the pink and red line here on the chart, or blue and orange when the price is moving upward. We will use to progressively adjust our stop loss along the trade if we are in a trade, of course. Sometimes you will see horizontal lines like that white horizontal line on some of the charts. There are several of them in different colors, red, white, orange, magenta, and purple. These represent what we call max price levels, which are potential supply and demand level, and the price may react to these levels. So if we consider, let's consider the pound CAD on the 5-minute time frame with a time bar chart. So here, so you can see how these lines are respected by the price either as a support level or a resistance level, and you can see how the price has reacted around specifically this max price level. And when we check on the part, you can see that the price nicely respects most of the time these levels. And these levels are calculated every weekend, every Saturday, and made available so every Sunday. So we just need to wait with patience. The chart I'm using here corresponds to one of our max level, which corresponds to what we call the max ETF sum. And a sum chart is a constant range bar chart instead of time bar chart. A constant range bar chart, which are very similar to the Renko bar chart, with the exception that the constant range bar chart can overlap. So they give many more details in the price movement, and they are time independent, and so they are really practical to see many of the details, and so to fine-tune our entries and exits. Let's have a look to the pound yen, which is also very often an interesting pair to consider. So the pound yen, it's not moving a lot, but it's trending. The pound yen can be also an opportunity because the yen is strong. The pound is now pretty much neutral. So we could consider also a short trade on the pound yen. But I would prefer to stick to the CAD pairs because of the CAD non-farm payroll. So now, if the price continues to go downward, we should have very soon a short entry setup on the pound CAD. Then the USD CAD may be a good idea. Okay, we have here a potential entry, but not yet. We have to wait for the breakout of this support level, which may happen on this candle. Now, the USD CAD may be an opportunity to short, of course, as you are telling us the CAD should strengthen, so. And the US dollar is pretty much weak. Okay, the breakout has failed, but we can have another attempt. I can fine-tune a little bit my support level here. We may have the breakout here. My stop loss is well placed. We are facing this max price level. The price is crossing it. Okay, now we may be ready to open a trade approximately on this level where I have my cursor. Not yet. My stop loss is well placed. I can tighten it a little further. Not yet. Not yet. Okay, now I sell the pound CAD. So now I am in the pound CAD. I can show you on the trade panel. So view terminal, you see the pound CAD has been opened with 62 microlots. So this means that one unit is made of 31 microlots, and I will show you what will happen when I will close one unit, when I will make one MX. So and so you can see here on the pound CAD panel that if I close the trade now, I make 0.0%. So you see the percentage, the result in terms of percentage. And the risk, which is 1%, just a little less than 1%, because of course the size of the trade is always rounded off to the smaller number. So it's rounded off by default. Now, because the orange line for the stop loss adjustment has been crossed by the price, we have the corresponding magenta line which appears here and which will be used to progressively adjust the stop loss if the price continues to move in our favor. For the CAD yen, I'm still waiting for a long setup, so we need to wait for the slow bias to turn to green. Jans, for the moment, some indices are nice to trade, or some commodities like gold or crude oil are nice to trade. The Forex has been rather quiet these days, but some of the other instruments are nice to trade. So the Dow Jones, of course, the gold these days have been nice to trade. Now, what I do when I have my lines here to adjust the stop loss, so as soon as I have them, so and if my stop loss, my initial stop loss is, in this case, above that line, I try to keep a distance between that level given by the indicator and the stop loss between 2 and 6 pips, depending on the volatility of the market. Let's say 5 pips. So 5 pips here is just above this level. I'm going to tighten a little bit the stop loss. You will see the effect on the trade risk here. So it is minus 0.97%. So let's tighten a little bit the stop loss in this place, and you can see that the risk has dropped to minus 0.84%. Now, this blue candle may be an exit at the bar. I have to check here one of our tools. Yes, this blue candle here is an exit at the bar given by one of our exit rules. We have several types of exit rules. Exit rules given by some of our indicators, or by price action itself, or a combination of both, or timing consideration. So, but we have always the possibility to use what I call a discretionary decision. A discretionary decision is a situation when we can decide to be more flexible with the exit rules, provided some conditions are fulfilled, and the conditions are always based on the trade risk management itself. It is an important criteria, and here I base my decision on the fact that my first MX, I want my first MX to be profitable. Of course, the price to pay for that is I may have to close my 2 units on the stop loss. And the second condition is my risk must be a small risk, so 1% or less, which is the case. Because should I close the trade with a loss, and you can see that the potential loss has already be reduced somewhat, so it's a loss which can be easily recovered with one winning trade. You can see the price seems to react on this max price level, which seems to act as a resistance level to the upside. And the price probably will bounce off from that level, but there is never a guarantee for that, of course. And so we need to be patient. We need to be patient now. And whenever this line will drop, I will adjust my stop loss, reducing progressively my risk. Now I can adjust my stop loss around this level of our home base channel. That way, continuing to reduce my risk now to 0.75%. I have already reduced the risk by 0.25%. This means that in the worst case scenario, the loss will be a small loss. And before a trend unfolds, it takes sometimes time for the trend to unfold. We may have 1 or 2 losing trades. This happens sometimes. The max has a winning rate of around 75%, sometimes less, sometimes more. It depends on the market conditions. It depends on the time frame. Usually with a higher time frame, the winning rate is a little bit higher, up to 80%, 85%. But sometimes it can be smaller, like 70, 65%. Even for a small period of time, 55%, when the market is really difficult or challenging, but never a long time period. And with a 75% winning rate, we may face losing streaks made of 4 to 10 losing trades in a row. This is not uncommon. My own record in the losing streaks is 6 losing trades in a row. But the losses with the max are always small, usually on average between minus 0.3 and minus 0.5 R being the risk we take on the trade. I like to use the Van Tarp notation, so R represents the risk. When I say, for example, minus 0.5 R, this means minus 0.5 to 1. And you see, sometimes we may have a positive news release, but the price takes time before to move, if it will ever move. So it's not 100% automatic. what we can see is on the next bar, so most probably I will be able to fine-tune a little bit my stop loss, reducing further my risk on that trade. But I do not want to tighten too much the stop loss. The stop loss is around 17 pips for the moment from the price. I like to keep a distance large enough to provide for some volatility. And the second line will appear here. So the red line will appear when the price will close below this blue line. And of course, when the market is not moving a lot, despite the positive context, what you can do with the market, you can also adopt a scalping approach. And there are an infinity of ways to scalp the market. And one way to do that is you can close your trade once you achieve some result here. For example, we can close the trade if the result here achieve plus 0.5%, which would represent so plus 0.5 R profits, and then consider the next trade. Or you can choose any objective. You can decide, for example, that as long as the price moves in your favor, you stay in the trade, and as soon as you see a bar in the opposite color, so a blue bar, you can decide to close the trade and take the pips you can. This is scalping. In fact, there is an infinity of ways to scalp the market. Now, can I adjust now further my stop loss? Yes, I can. I can set my stop loss around, so this level here. You will see how much the risk will be reduced. So at 0.63%, so 2/3 of 1%. Now we can see the slow bias in the CAD-yen seems to turn to green. We have to wait for the confirmation of that, so we need to wait for the appropriate bar for that. So because on the left side of this vertical line, which moves with the last closed candle, so we have all our indicators which already takes into account what the price is printing on the chart, but we have always to wait for the bar to close. Okay, you see now the red line begin to appear here with this red circle because this candle has closed below this blue line. Can I adjust further my stop loss? Not really. And so here now the slow bias on the CAD-yen has turned to green. This means that our trend has turned upward. We call our trend ETF trends. But we need to wait for a valid entry setup now. What we like to do also in the max is to draw vertical lines when we have an entry setup bar and an exit setup bar, and we use a color code for that. So green line for an entry setup bar and magenta for an exit setup bar. My initial stop loss was here around 17 pips, if I remember correctly, or 20 pips. I don't remember exactly where my stop loss was. Let's say 20 pips. So this means that my minimum profit I want to take will be at 10 pips, so below my entry level, which is right on this level. But this does not mean that I will have to take the profit when the price reaches that level. This means that once I will have an exit setup, I want my exit level on or below this blue line. Now that we have also the green line, I will use the combination of the red line. I will use a combination of the red line and the magenta line to adjust my stop loss. So this blue line is also an exit setup, but it does not provide a profit large enough. So I will skip that exit level using my discretionary decision. So the exit setup we have at the close of this blue bar is simply a bottom given here by our Stochastic indicator. There are two exit rules which have triggered here. One is given by this Stochastic indicator. We have even three exit rules which have triggered at the same time. Lloyd, I rely on the currency meter only on specific circumstances. I don't use the currency meter at any time. So I have a look to the currency meter whenever I know that there is a high probability that the big boys are trading in the market, are making decisions or adding to their position or decreasing their position. And so one of the circumstances is, of course, the news release. But there are also other circumstances when we know they will be present in the market. They will be actively present in the market. So the currency meter, like any other tools, by the way, is not a holy grail. There is no holy grail in the tools we can use as a help for our trading process. The holy grail is in yourself. The holy grail is your ability to apply a methodology, to apply concepts and rules you learn from some trading system. And I can summarize that holy grail by the two terms I have always on all my chart: patience and discipline. And when I am in a trade, I feel no emotion. I'm trading for so many years now, I know what I can expect from my trading, and so I have no emotion whether the trade will be a winning one or a losing one. I don't care, simply because I know that one trade alone, a single trade, never makes a good trading system or a good trader. You have always to consider the result of a large sample of trades. This is why, by the way, in our Max Standard course, one of the homework we require to our students is the statistical homework, for which we require 200 examples of setups, 200 successive entry setups. Because with a sample of 200 setups, so we will have, of course, average numbers for the winning rate, the losing rate, and so on. We will have on these numbers an accuracy of 10%. And an accuracy of 10% is a good accuracy. This means that if, for example, if we have with 200 trades example, a winning rate of, let's say, 70%, an accuracy of 10% means an accuracy of 7% here. So this means that the future winning rate with a high probability, 95% probability, will be 70% plus or minus 7%. And so you have an interval between 63 and 77% winning rate you can expect in the future. Let me illustrate here a scalping approach. You see here, if I make an MX, I will make an MX here below my level here, my minimum level, if the XXX profit achieves 0.50% or more. I have to take into account the spread, of course. Let's wait a little more. Okay, I make an MX now, here. Okay, so I have banked here 1/4 of a profit, of a percent. Why? Because we have 2 units, and so each unit contributes for half of the trade. Now, because I have closed 1 unit at my minimum profit requirement, because most probably if the price continued to go down and then we have an exit setup, my exit would have been in this area anyway. So this profit, which is closed now, contributes to reduce the risk on the trade. Now the risk is pretty much so break-even, minus 0.04%. If I tighten just a little bit my stop loss, you will see that I will be break-even. If my stop loss want to adjust, my data feed is a bit stopped here. Sometimes this happens. Let's wait for the data feed to resume. And this could be, no, this is not a valid entry setup on the CAD yen to go long. So some brokers, in fact, freeze the platform, and so you are paralyzed with the platform, and some other brokers, in fact, freeze the data feed. So here, with this broker, the data feed is for some seconds, so frozen. We have just to wait just a moment. Yeah, Robert. Patience and discipline plus discipline, discipline, discipline. Always discipline. Yeah, always. You see, my chart is not frozen, but the data feed is frozen for the moment. Okay. What has happened now? The stop loss has been adjusted. So the data feed is again there, live. Let's tighten. Oh, no, I have to wait. I have to wait. Okay, now it's... What's happening here? Okay. Let's continue to tighten a little bit the stop loss here. And you can see now I am break even. This means that if the second unit now is closed on the stop loss, globally my trade is break even. I don't know, Carl. Here, remember, this is not a trading room. Okay, I cannot call for live trades. We are in real time, but I cannot call live trades. So I'm using a demo account. Okay, I'm using a demo account, and I may suspect that it is on the demo server of the broker that they may have some freezing problems. Okay. I'm not a registered CTA, and so I cannot call trade live. Here in Europe, I live in France, we have, in the European Union, we have very strict rules for that. So, and I have to comply to the rules. But for many brokers now, the demo server and the live server shows the same data most of the time. But sometimes their demo server may be sometimes a little slow. And now, in this case, whenever I will have the opportunity to tighten further the stop loss on this pound CAD pair, so I will begin to lock some profits. But it's too early now to continue to tighten the stop loss. Let me check. Yeah, too early. We need to wait for these two lines to go further downward. And so the long setup has failed here for the CAD yen, even if the trend has turned to the upside now. So we have still to wait for a long entry setup. You can see here on the information panel the number of open units, and so you can see for the pound CAD, so we have one opened unit. I can show in the terminal panel that the trade size has been reduced by half. You remember the trade size was 0.62. A CTA is a certified technical analyst. It is one of the series, of the course series you can follow in USA to be authorized to call trade life. And there is a corresponding courses or certification in Europe. But in Europe, the certification level is even more difficult to achieve. First of all, it corresponds to a 4 years study course. 4 year study course. At my age, I'm almost retired now. I will not consider to take such a course. And they require also to have some year experience either in a bank or with a broker. And so to get the agreement, so to call life, it is really difficult, as long as you live in a country in the European Union. So. Well, no, for the moment, the MTM cannot be used on MT5. We don't use MT5 for the moment. Let me pay attention here. We may have another entry setup here. Let me check. No, it will not be a valid entry setup, but the price is moving so nicely upward now. And at the close of this candle, if it is still a red candle, I will most probably be able to. Oh, we have an entry setup here. Let me check here my CAD-yen. I have to tighten my stop loss that way. Here, and I will make my entry, yeah, just above this level here. Now, with this red candle, I can tighten a little bit my stop loss. I will set my stop loss so on this level here. And you can see now I begin to lock some profit, small profit of course, because we are at the beginning of the trend, if we have a trend, of course. And by the way, this blue candle on the pound CAD is an exit setup. It is an exit setup, and this exit setup would have given my exit level right on my blue line. Right on my blue line. So when I have made my MX here, it was not a bad MX. Okay, the entry setup has failed for the moment, so on the CAD-yen. But everything is ready. I can tighten a little bit the stop loss here. No, oh yes, no, not yet. Look, I'm not 35 years old. I'm not 35 years old. Oh, I can say I am 35 years old since 27 years. Okay, here I have my entry level, which is achieved for my CAD-yen. So I can buy here the trade. So the trade is open, and so you can see that now the number on the CAD-yen, and in the global column now you see the result for the two simultaneous trade. And so my stop loss has a size here of 18 pips. I will fix my minimum profit requirement at 10 pips, so 9 pips plus 1 for the spread, let's say. So 10 pips will be just above this level here. And I will do exactly the same thing as in the pound CAD. In such a way, you will see how the risk will decrease for the CAD-yen. And now for the pound CAD, I can begin to consider tightening a little further my stop loss right here. And now I'm looking a little more profit. And you can see the global risk has continued to decrease. So to trade with less than 1% global risk. And now for the remaining open unit on the pound CAD, to close the second unit, we have within the max 2 possibilities, and each trader must make his or her decision. The first possibility is to close that second unit on the next exit setup, whatever the exit setup. And the second possibility is to keep that unit opened as a running unit until we have either a movement invalidation. A movement invalidation is a behavior in the price movement when the movement makes no longer sense to be traded, or we wait for the ETF trend reversal. But because the time is running, I will close the second unit on the next exit setup. And of course here we don't have the time enough, 2 hours is not enough to show the scaling technique, so I will not make scaling here. But you can see here the 2 lines, the red and the magenta line, continue to drop downward. I can further tighten my stop loss around this level here, reducing the global risk to 0.75% now and locking a little more profit on the pound CAD pair. My stop loss is pretty much large on the CAD yen, 23 pips. I can consider reducing the stop loss around these 2 lines which begin to appear, the blue line and the orange line. So I will set my stop loss here a few pips below this level, somewhere in this level, and you will see how the risk will be reduced on the CAD yen, so at minus 0.7%. So globally now my global risk on the 2 pairs is less than 0.5%. Less than 0.5%. If I close the 2 trade now, on the XXX profit, you can see that I will make 1% profit on the 2 trades simultaneously. And so you can decide, of course, to close all your trades when you achieve some result. Just to remind you, so if you succeed to achieve on average 0.5% profit, 0.5% profit per day, and if you trade every day of the year, you will have approximately 250 trading days, which is not necessarily easy. Don't get me wrong, this is not necessarily easy, but if you succeed to make 0.5% profit every day, at the end of the year by compounding your result, you will triple your account. You will triple your account. If you succeed to make on average 1% per day, which is not necessarily easy, at the end of the year, you multiply your account by 10, approximately by 10. And this is the power of compounding. Now I can tighten a little bit more my stop loss here. I can set it to break even here, and you can see that the global risk is reduced to minus 0.3%. My lock profit on the pound CAD is 0.27%, and I will be able to further tighten the stop loss most probably on the next candle or the following one. So if the trend continues to unfold, let me take out this blue line. On the CAD yen, if the price reaches that blue line, I will make my MX, because we will have most probably also an exit setup triggering on an appropriate place to consider banking some profit. Okay, on the next candle, if it closes as a red candle, I will be able to tighten further my stop loss. I always use the outest line to adjust my stop loss. These 2 lines take into account the momentum and the volatility of the pair, and so it gives me enough room for the price to breathe, and so the probability to be stopped out with higher volatility is extremely small. Yeah, the pound CAD 19 pips from a good exit level, yeah, probably. This one. And when you have one or several trades which are simultaneous open, when you reach such a situation when your global result, which is still negative but represent a small risk, so this is the maximum loss you may have now on these two trades simultaneously, you have to feel very, very comfortable. Because losing 0.4% of your trading account is nothing. So it's really a small loss, really a small loss. And there is plenty of flexibility to still close the two trades with a profit, or the two trades with a profit. Not necessarily each trade with a profit, but at least globally the two trades with a profit. So I can tighten a little bit my stop loss here, that way. We have other rules, complementary rule, which allows us to tighten our stop loss, and I will tighten furthermore my stop loss on this level, in fact. And you can see that my global risk now is less than 0.3%. And I'm pretty much sure to make at least 0.5% profit for the day. For the CAD yen, I can even tighten my stop loss following the special rules we have, so on this level here. And now you can see that with these adjustments, I'm pretty much for the two trades break even. Break even. On the next candle, whatever the color on the next candle on the pound CAD, I will be able to tighten further my stop loss. And probably also on the CAD yen in such a way so I will be out of break even for the two trades. With the max, we never fix a target profit, because when we are trend followers, it makes no sense to define a target profit, let's say, for example, at 1 to 1 or 2 to 1 or 3 to 1, whatever you want. Because when you are a trend follower, you want to catch the largest portion of the trend. So whatever the length of the trend, so it may be 20 pips, it may be 200 pips. And why restricting the target profit to 20, 30, 40, 50 pips if the movement is way larger? So a trader, a trend following trader should try to catch the largest possible portion of the trend. One question which is often asked when we use constant range bar chart is how do you fix the size of the range? You can see that for the pound CAD, the size of the range is 6.8 pips, so 68 pipettes, 3.6 for the CAD yen. And so the size is calculated with a specific procedure in order to have an optimized range size. And this depends on the volatility, it depends on the momentum. And so we may have every day a different range size. Let me check here if I can. No, I cannot tighten further the stop loss. And so, but if we want to see more details in the constant range bar chart, we can decide to divide the size by 2. And we have a nice tool. We can do that on the fly here, this way. Sometimes one of our indicators must be updated. It has sometimes some strange behavior. And so we see many more details in the price action itself. But let's not do that here for now. I want to update this. Okay. The price resumed to the upside for the CAD yen, to the downside for the pound CAD. Okay, now I can tighten a little further my stop loss here on this level. Now I'm more than break even for the two trades simultaneously in the worst case scenario. We can check on the terminal panel the size of the CAD yen pair, 56 micro lots. So and we may approach very soon an exit setup here on the pound, on the CAD yen. You can see with the information panel that I may still have a loss on the CAD yen, but globally I begin to lock some profits. And now I'm ready to make an MX here on the CAD yen. Let's wait with patience for the appropriate condition for that MX. Okay, be ready to make an MX here. I have missed the MX. They have not been fast enough. This is an advantage you young traders you may have on older traders, so you may be faster to push on the button. And so I'm forced to wait for the next moment. But in the meantime, I can tighten further my stop loss around this. Not too much. Oh, no problem, Dan. No problem. Yeah, Warren. Young trader may even worse. I was taking care of my 3-year-old child just a few minutes ago, Mr. MX2. Yeah, unfortunately, this happens to Warren, indeed. And by the way, this brings a very interesting question. So, many traders or many students often ask during the course or after the course, what is the best time frame to trade? And in fact, there is no absolute question, answer to that question. No time frame is the best time frame to trade. All the time frames are good to trade. The trader must choose the time frame which best suits his or her time constraint. If you can be a full-time trader, then you have a total freedom to choose. Let me make an MX now. I will not miss that MX. Okay. And you can see now the CAD yen pair trade is looking some profit. And I have said that I was sure to make at least 0.5% profit for the day, which is now the case. And I can now tighten further my stop loss on the CAD yen, looking a little more profit. So, and similarly on the pound CAD, so in this level, so now I'm locking 2/3 of a percent for the day for the two trades. So the trader must choose his or her best time frame fitting the constraint, the time constraints, because so if a trader is a full-time trader, of course, a small time frame can be used. In fact, the trader in such a case will have a total freedom to choose the time frame. But the trader who has another job, a 9-5 job, so may have some difficulty to trade a small time frame. And so, but there is no problem to choose a higher time frame. The 4-hour time frame, the daily time frame, any time frame between the 4-hour and the daily, for example, the 6 hour, the 8 hour, the 12 hours. With MetaTrader, we can build, so with the offline chart, we can build any time frame, in fact. And so, that way, the trade will become much more comfortable to trade under these time constraints. Of course, there is a price to pay. So with higher time frames, we will have in the same time period, let's say a month, for example, less opportunities of trade than a small time frame. With a 5-minute time frame and the corresponding time bar chart, we may have up to 10 trades per day when we just monitor 2 pairs. So, and 10 trade opportunities is a lot for a day during the European session. Now I can tighten further my stop loss here on the CAD yen pair because my 2 lines are nicely going upward, and I will set my stop loss just on this level here, and you will see the effect on the locked profit, almost 0.75% now. And on the CAD yen, I still have one opportunity. So I have one opportunity on each of the pairs. I would like to keep these 2 opportunities until the trend reverses, but the time is flying, and so on the pound CAD, I will close the second unit when we will have another exit setup, which may come with this candle here. You can see on the terminal panel that the size on the CAD yen has been reduced by half. And in the account history, you will see these 2 units which have been closed here with the respecting profits, so the pound CAD and the CAD yen. So this candle is indeed an exit setup. Let me check. Yes, it is an exit setup. So in this case, I will close my second unit on the pound CAD. So on this level, I have to define my exit level. So right on this level. On the CAD yen, I can use an alternative rule to adjust my stop loss instead of these 2 lines. And in fact, it happened that I can adjust my stop loss in this area. Now locking 0.84% profit for the 2 trades. So we have several ways to adjust the stop loss. Yeah, Lloyd, patience. The problem I see with not necessarily the traders, because the traders are the retail traders. We are all retail traders here. They are influenced by so-said professional traders who want to teach trading system. And so many of them have a scalping approach. And the scalping approach idea or concept is to stay in the trade as short as possible, to close the trade as fast as possible. Because they consider that the risk becomes larger and larger when you stay longer in the trade. But in fact, when you have the appropriate context, when you know that the context is behind you, you need to have time for the movement to unfold. So when you have the context on your side, be patient. I have to pay attention here to close my second unit on the pound CAD. I do not want to miss that exit because we have indeed an exit set up here. But as I have said, as an alternative to close that second unit is to wait for the trend to reverse or the movement to invalidate. And in fact, the most difficult aspect in trading is to understand the context. It requires practice. Let me pay attention here to the exit. Okay, I'm ready to make my x66. Okay, I make my x66. So here I have closed the pound CAD trade with a profit of 0.65%, and I still have one open unit on the pound, on the CAD yen. What is the global context? The global context is the set of all the elements around the world which can influence the different markets. Knowing that a same element may have a different influence in one market and another influence in another market. And so the market you may consider are the bond market, the stock market, the commodities market, the currency market, of course. And among the factors you have to consider are the following. All the geopoliticals. What are the events around the world which may influence a market? A typical example has been the problem in the Middle East, which are still present, which have an influence on the price of oil. And the price of oil, which may increase or which may decrease depending on the event, will have an influence also on some other markets. It may have an influence, for example, in the bonds market, if the price of oil contributes to increase the inflation. It may have an influence in the currency market because if the risk is extremely high, so the big boys will have a tendency to go through safer currencies like the yen, like the Swiss. Then we have the central bank's decision, not the interest rate decision, because these are part of the news release, but all their daily decisions, all their daily operation, because they make interventions day after day in the market, and depending on their intervention, you can follow these interventions on their respective website. For example, the Fed details every day all its interventions day after day. And then we have the news releases, of course, the news release as we have seen today with the non-farm payroll, especially in the CAD pair. In the CAD currency, you can see the kind of movement when the conditions are appropriate. And then we may have also, when we consider intraday trading with small time frames, some timing aspect. It's clear that an important market open like the Frankfurt Open, the London Open, the US Open, the Wall Street Open may have some influence in the price movements. And then the important market close, like the Frankfurt close, the London close, the US close, may have also some influence in the way the pairs are moving, because the big boys will either add or limit their position. So, okay, Randy, have also a nice weekend. I hope you have enjoyed this session. So have a nice weekend and see you later in one of our future activity. So. Let's have a quick look to some of the other currencies here. Let's see what the pound US dollar. The pound US dollar has made so no big movement. The pound Aussie has not moved a lot. Let's see the pound Kiwi here. The pound Kiwi could have been a good opportunity also. Then the pound yen has not moved a lot. moving sideways, and then so the cat DN. So we have chosen the two, most probably the two best pairs so for today. And so for the traders who trade much more time, of course, the next entry setup can be a way to engage a new trade, of course. And you see here with the two trade, the pound card is closed. We can see on the terminal panel that we have just the CAD-yen pair, which is still running. And we are looking almost 1% for the two trades. Looking 1%. This means that if I tighten a little bit my stop loss, which I can do that way, now I'm looking 1% for the day. 1% for the day. And you can see that the stop loss is adjusted, so in live conditions. So the stop loss is at 81.250, 81.250. If I close the trade now, I will make 1.2% profits. But let's wait, we still have around 20 minutes. Let's wait for the next exit setup on the CAD-yen. Look, thanks for your kind words. Yeah, the companion indicator, so the bias is really a nice tool. And you can see as long as it doesn't reverse, in fact, we can stay in the trade. We can stay in the trade. But I like to close the trade before we wrap up the session, so whatever the result of the trade, okay, this red candle now is an exit setup based on our RSI indicator and based on another tool we have on the chart. So I will fix here my exit level. So where I will set my exit level on here. So if the price follows through and hit this level, I will close the second unit of this CAD-yen trade. Now, if you have any questions about the max, so feel free to put your questions in the question area. And so either Craig or myself will be glad to answer them. Dan, you mean for the pound card? Yeah, probably. You see that on my SAM chart, I don't have that tool. Because with the SAM chart, we have much more redundancy than with time bar chart. This exit setup, so this candle has closed as a blue candle. It's no longer an exit setup bar. And we don't have what we call a ratchet condition, which allows to trail our exit level. So we have to wait with patience for the next exit setup. We we may have another exit setup. I'm drawing some lines on my chart, but I have not been fast enough. But we have another exit setup, and my exit level is still good. So here, on this level, if the price hit that level, I will make my X66. So, but if the price comes back in this area, we will have another exit setup. Oh, thanks, Ingrid. Have a great weekend too. And when a trader is in a trade, knowing the context, if the trade is in agreement with the context, the trader should never fear to face these pullbacks. The pullbacks are natural movement along a trend. So, okay, I'm ready to make my X66 here. Not yet. But we may have the possibility in this area. And with this blue candle, our exit conditions still apply. I can fine-tune my exit level. We call that a ratchet condition. On this level, so I'm now trailing my exit. And this area may possibly provide a better exit level if the price behaves accordingly. Okay, we may have an exit now, and I will make my exit right on this level here. We are in the context of an exit setup, one of our exit setups. The max graduates have recognized, the max standard graduates have recognized the rule I'm using here for that exit setup through the drawing I have made on the chart. We like to draw lines on the chart to figure out what we have to do. Okay, I make my X66 now here. And so the trade on the CAD now has been closed with a 2/3% of a profit. And you can see the total profit for the two trades, so is 1.31%, is just 1 hour and 3/4 of an hour. But the movement probably has still a potential to move further. But we are limited here in this session, so I prefer to close the trade now. And you can see in the terminal panel that the two trades are closed. Okay, and in the account history, you have the 4 units here with the respective profit, so on the pound CAD and on the CAD yen. Okay. Any questions about what I have presented today here? No, we don't try to control the market, Robert. We just draw a line to help us figure out what is happening and where we have to take some decision, because we have to, of course, to follow what the market is doing. We cannot control the market as retail traders, so we have just to figure out where our risk may be. Okay? Imaginary control. No, in fact, it's just the control of your decision. It's just a matter of applying the concept and the rules of our trading methodology, but this requires, of course, to understand and to perfectly know and master all the rules, in such a way to know at any moment which rule or rules will apply, because the rules will tell you what decision you have to take. And so we have basically two steps. We have to recognize a setup bar, and so the setup bar may be an entry setup bar or it may be an exit setup bar, and once we have found a setup bar, we have to define where to make either our entry or our exit, simply following the rules. But of course, the entry rules and the exit rules, we have many of them, just to be as accurate as possible in the way we make our entries, and after that, essentially, as accurately as possible our exits. Okay? And you see a 1.3R reward to risk ratio, because my risk was 1%, so 1.3% represent 1.3R as a reward to risk ratio in less than 2 hours. So with a news release, it's not necessarily a big result, but it's a nice result for the day. And I have not used the scaling technique. The scaling technique is nice to use when we are able to catch a trend starting around the London Open. I trade myself during the European session, and when I consider a trade, I want to take the trade as close as possible to the London Open in order to try to catch the largest portion of the trend when we have a trend, indeed. Okay? Any questions about what I have presented here? Or any comments? Oh, thanks, Matthew. So, for those of you who were at the presentation, I think it was last week, let me just recap. Let me take out, first of all, these two expert advisor. The chart will be clearer, so remove. Okay, I can close them. So we propose, in fact, two courses, our flagship courses, which is the Max ETF Standard, which will start June 14th. I think it's next week. Yeah, it's next Friday, and the course will hold for 7 weeks. So 7 Fridays at 3 p.m. Eastern Time. With a bonus session, there will be an 8th session. And so we will make next week, I think it will be Tuesday. Yeah, Tuesday. We will make a preview of the contents of these two courses, so the Max ETF Standard and the Max ETF Primer. So the Max ETF Primer course held for 2 days on June 18th and July 2nd. So each session lasts approximately 3, 4, 5 hours. It depends on the context of each session. So they are dense session, and you have here so the price and the webinar discount for these two webinars. There are also the links you can use to enroll in these courses, and there are also bundle packages which are available. So if I take the previous slide, I think we can see for the Max ETF Standard course, we have a bundle containing the Max ETF Primer, the Max ETF Lite, and the Max ETF Standard, which represent 4 months of training. So for 2,679 instead of 2,999. Plus the price of the Lite and the Primer. And the Primer is just a subset of the Max ETF Standard course. It is a very small subset which will give you an idea what the Max may be and who we are in terms of teacher and in terms of traders, but these two sessions will be extremely dense with a lot of information, but we have a very reduced price of $159 instead of $329. But there is also a package, a bundle with the primer and the light, so for $759, and you have the link you can use to enroll if you want, and there are for the two courses payment plan if you want. In the meantime, if you want to have some more information, you can always consult our website at www.maxtradingsystem.com. I have almost said Matrix because I have just received the last book written by Von Tarp, which is called Behind the Matrix. I was thinking to that book. You can send us an email to max.trading.system@gmail.com, or you can even contact us by Skype at Max Trading System. Max Trading System is our Skype ID. So no problem to contact us. We will be glad to answer all your questions. But we will have, Tuesday, a preview of the content of these two courses. I will give more details about the content of each training session. So, okay, Peter, Jan, Dan, thank you very much, Francis, Robert, Edward, and in the question area, yeah, Rinus, if you are new in this model, how can you learn everything? In fact, you can start at any level. The best approach is, of course, to take the Max ETF standard course because it contains the most basic and important concept and rules of the Max. After the Max ETF standard, we have two higher level, which are the Max ETF Advanced and the Max ETF SAM, but the ETF standard is a pre-requirement. If you want to start smaller, slower, you can start with the ETF Primer, or you can take the package. So the package with the primer, light, and standard. And so you can attend live for the sessions, the training sessions, when they will be held, and or by video, because our training sessions, which are live, are recorded, and the video are made available to the students, of course. So you have the choice to participate live or to follow the course through the video. And for each session, in fact, you will have also the homework. You will be invited to enroll in a Google group. This Google group is a requirement, and it is used for each courses for the homework. And so the student, after each session, makes the homework, send the homework to the Google group in such a way that each student can see the homework of every other student. Then Chris and myself, we grade the homework and we send back the homework to the Google group in such a way that everyone can read and analyze the graded chart, the graded homework. And this homework, or these homework, are extremely important because they are an important tool for you to understand or to realize that you understand correctly and you apply correctly the concept and the rules. They are, in fact, a validation tool for yourself. It is not us, Chris, Craig, or myself, who must be convinced that you are applying the rules correctly, but you have to be convinced you apply the rules correctly, and you have to be shown when an error is made in such a way that when you will decide you are ready to trade live, you will be, you can start safe applying the rules and the concept. So, and this is the way we grade the chart. So, we make, the student makes some annotation on the chart based on some conventions we have, and then we make some comments on the things which are made correctly, but also on the errors. So, and so, I will redisplay the last page of my PDF just for you to have the information. So if you need some additional information. So, okay, no further questions? You're welcome, Rinus. And Craig has mentioned in the chat area of the GoToWebinar room, so his email, so you can also contact him to that email. So Max Trades for you, 4 it is the number 4, so maxtradesforyou@gmail.com. And we will be glad to answer your questions. So, well, if there are no questions, so I thank you very, very much for your participation today. I hope you have enjoyed this presentation, which is a live presentation. And so I wish you a great, great weekend. I hope you will have fine weather to enjoy your weekend, as I will have here in France. And so see you either in our preview session next Tuesday, or in one of our future training courses, either the Max ETF Primer or better the Max ETF Standard. And in the meantime, take care. Bye everyone.